And the best part is those gurus, they like to ask you to do, hey, you should buy 2 or 3 units so you get a multiple loan submission, compressing your loan compression and things like that. So these are the issues. People thought that there was a good deal in town.
Property overhang in the residential sector market here in Malaysia. What does it mean for you as an investor or maybe a first-time house buyer? Is it good? Is it bad? Is it an opportunity or is it really a threat? Today welcome to LT Property Insights podcast, and we have the man himself, LT. What do you think about the property overhang market here in Malaysia?
I think Malaysia now we have this major issue here is because we have too many oversupply of residential properties, condos, and I believe all these condos that has been built has enough takers or people to dwell in or to stay themselves. Rather, I think now there's a lot of properties, this type of high rises that has been pushed into the market for many purchasers to buy as an investment, or some of them buying it for own stay but later on going to rent it out. But having this amount of numbers coming up in the market and without the demand to take up this kind of properties is the big issue. Because is there a population or is there demand, whether there's demand or whether there's demand to take up such supply in the market. And because with all these numbers that is being supplied, we are all looking at where do we get the buyers from. And having the developers to continue building it, and the developers are having a tough time to sell it, and they rely on real estate agents or real estate negotiators, companies that are agencies that are coming out to push it in the market with all sorts of cash rebates, all sorts of funny packages that come up in the market in order to push the product out. It all started from this DIBS scheme, with the developer interest bearing scheme. I think those developers wanted to provide these installments, to take over the installments during the time when they are constructing the property. So they imposed these DIBS schemes to make the buyers come in more easily and don't need to pay an installment during the construction period. So this helps the buyers to, of course, have a better cash flow. But in line, they actually did not know that majority of the developers definitely was factored in this interest into the purchase price, whereby the purchasers or investors are buying the property at a much higher value. Okay, so when they buy at a much higher value, in time to come when they have gotten their keys, problem arises when those rental yields or the rental per month that those agents committed, and even the developer salespeople who has committed a very high rental, can they actually rent the property out that high?
And we hear a lot about these guaranteed yields, sold by agents or developers out there. But at the end of the day, is that really the reality to it? How is it that everyday investors or homeowners can really?
No, actually, it all falls back down to these purchasers and investors for doing their own due diligence and research. Many do not do it. Many just listen to the so-called negotiator or agent who's selling the product there, who's pushing the product, and they try to believe, or I would say lazy investors or lazy purchasers just try to believe and in hope, the big word is hope, that yes, I can get this such rental by then. So by the time they got their keys, the issue is when they have seen the rental at the neighborhood areas and the agents will tell, oh, now actually can rent this much only. The property price did go up much, so next door renting this much. Or some even say, why not you turn your unit into an Airbnb, rent out by days, so you can get a better value. Or some even say rent out by rooms. So are they the right people to manage such property issues? And some people say, okay, I have a company, agents can have a company to manage for you. Then the question is whether can the agent do it as well? So many people with this guaranteed rental returns policy as well also becomes an issue because over time they could not guarantee you the rental yield. They could not pay you the yield that they promise you, and they will discontinue or terminate the contract, and then eventually it falls back to the owners to hold the property, rent it out, or to find a tenant or find a room rental tenant and split the rooms into different tenants. All these issues will come up, and I always suggest that, of course, ever since these DIBS schemes has been introduced, I even told some of my friends, hey, don't go in first, DIBS very dangerous. So my friends also went in, and of course, each of us, we have our friends that actually kena this issue. And of course, why some don't kena, some listen. And all started from this DIBS, I think way back in 2008, 2009, it started this. And then after that, when DIBS was no longer the main package, then the packages still turned to high cashback returns, where you don't need down payments, zero down payment, zero down, all these things. Buy a property without money. Wow, very nice. So when these policies came up, people were jumping to all these condominiums or high rises or even properties wherever in the market where have zero down payment, basically no money down. So it tempts every buyer to just give in their own employment record or their payment vouchers or their own incomes to just put in the loan to get it approved to actually take up the property, even though they actually can't take it. Yeah, they are not actually qualified based on the DSR, debt service ratio. So they just went in and then they take this risk to purchase the property and invest, and then in hope that the rental will cover the installment. And then after the 0% or zero down payment policies, then comes to this policy where now we face in the market, which is the cashback policy. Cashback means what? They give you money to buy property. Wow, sounds damn good, right? Sounds like very interesting. When you buy a property, the developer gives you back cash from the bank, or your loan, you get a loan approval, and banks basically give you a cash upfront to so-called renovate the property or get yourself prepared for the property to do whatever items you need to buy inside. Now, when something sounds too fishy or too good to be true, that's when this real estate market become very, very scary. Okay, when if you see our real estate business, most importantly is whenever you buy a real estate, you need to pay your own money out. You need to take your own money out, whether you take it from EPF, your account to, or your own savings. That is actually started. I mean, the real estate market is started this way so that you don't have a bubble burst. Okay, whenever you buy a real estate, you need to have some money out. You cannot be stressing everything to the bank. So when you have a cashback or you have a 0%, actually you are eventually stressing putting the whole stress into the financier, which is the banks. That is why when you go to the US market and all these places where there's a bubble burst, because there's over borrowing. Yeah, there's over borrowing, and in Malaysia, I think we need to look at this to control whether this over borrowing is it reaching to a stage where you worry that the bubble will burst. And having the fact that all this cashback in the market, you can see that even today you have up to 35%, 30%, 25, 28, whatever, 20+% cashback from the property sale. And agents and negotiators, especially the young ones that have joined the real estate market, they are tempted to become a real estate agent or negotiator in those agencies that are selling projects, which they are not run by an estate agent, or an estate agent actually rents a license to them, and they operate as though like a sales force that try to sell projects, push the whatever product that's come in front of you, make sure the purchasers in the market buys. For developers, they don't care. As long as you agencies sell it for me, I pay you money.com, you can push the property out in the market. Yeah, it's fantastic. But where is the problem going to arise? It's the day when you collect the keys. The day you collect the keys, how many actually dwell and use the property themselves? And when you want to rent the property out, you cannot get the yield or the rental returns that you hope for and you have been told upon when you purchase the property. Now then, when this becomes, when you've taken up the keys, this is when the overhang comes. Many people will realize that, my installment is 4,000 ringgit, it's 3,500, but my rental, I can only rent out the unit for like what, 2 grand, 2,000, not more than 2,500. And now they realize one thing, the cash back that they have taken, it actually all factors in like a DIBS and 0% down, everything goes into the loan, and when you're paying the higher installment in comparison to when you put the money down. So this is the overhang situation. And when you see that happening over the time, whether 6 months down the road, 12 months down the road, or 24 months down the road, can the buyer or the investor who has bought the property now sustain to pay the installments and the continuous ownership of the property? So when this happens, which is why you see the problem continues on after this overhang, where is the market going to be jumping up? The auction market. Because in Malaysia, auction market means defaulted list from the banks. The default paymasters who could not pay, the defaulters list who could not pay the installments, and the banks have to lelong or auction up the property. But of course, take it seriously in this auction market. Malaysia auction market is not like any overseas auction market where you try to bid the property higher, the price up. In Malaysia, auction means property has been defaulted. Okay, the banks are getting an auctioneer or getting some agents to lelong off the property from the court. So many of the list of the auctions properties that you see, yes, you can see there's many comes from all the overhang condos, apartments, high rises that has come out in the market, and many cannot sell. And you can see from the auction, first auction nobody bids, second auction nobody bids, third auction nobody bids. Every time the auction nobody bids, 10% of the reserve price drops. So that's where you see a price drop as well. The price of property, why in the area the auction, the condo itself or the commercial property drops, because of the auction price dropping, then eventually it brings the price down. And if you can see, and many agents will still be advertising on iProperty, Property Guru for sale the property. And why are they just getting viewers to view and no closings? Because majority of the properties nobody wants to buy. There's an auction disturbing. There's an auction price which is disturbing, and people are trying to let the price go down. Then only they buy. And when the sub-sale market comes up, because of the property that was sold during the beginning, before the construction or by the developer and the agents, those 0% down period, those are the times when the buyers buy, they did not pay the money up front. And now when they sell, they can only sell based on the SPA price or lower, because they have actually taken the cash back. And that is the part where actually the cashbacks and those money there is actually the earnings that was supposed to be for the investors and purchasers, but eventually it was all charged to the purchaser in the first place. So at the end of the day, when you're owning this kind of properties, you are already buying a property at a much future value, which today now you want to sell it, you can't sell it because the future is not that near yet. That price could be maybe 5-10 years later, but you have taken it up front at 3 years or 4 years. That is why you can't sell that price.
Yeah. So wow. Yeah. So we've gone through the whole thing, where starting off with the DISB scheme, and then that increased the DIBS scheme, and then that increased demand in the market, and then the developers taking advantage of that, keep pumping into the market. And I think, and then from there it evolved into cashback schemes, no deposit, no money down sort of schemes. And I guess, like what you mentioned, many investors or buyers, they are unaware of the downside, which is whatever price you're being charged is already factored in and is for some valuation in the future, 5 to 10 years down the road, and they are unable to keep up with their commitments. And in default, they have the option. When it comes to bank lelong, prices keep dropping by 10%, 10%, 10%. That is huge, and then that would even drive the potential for prices to catch up even further and further down the road. So I guess my question is, given these schemes in the market, should buyers actually take up these schemes? Who should take up these schemes and who shouldn't take up these schemes?
I believe there's not the question of whether who will take up these schemes and who is not. In fact, there should be a better control by the government or towards the developers, the pemajus that are building this and coming up with the schemes. There's not much controls from the government itself, and also I would say this banking side as well. When the banking side is not doing their due diligence much more better, and they're giving out the loans in regardless of the higher valuation that they're getting, then you will see the market bubble soon will come. And today in Malaysia market, we also have this issue. Let's give a take at Mont Kiara. Mont Kiara, History of Damas was always a high-end area where you see a lot of expats going to this place, and many developers aim to build condominiums there to sell to all these expatriates. But today, why Mont Kiara has become a place where even our local people can go and stay? Why? Because the price actually has came down. Mont Kiara is a very good example of a location where price was shot up very high and came back down slightly for the local market to accept. Of course, we have an influx of foreigners. Before the millennium, Malaysia, we have a very good foreigners policies where many majority big MNC companies all come to Malaysia, open up their factories and offices. So we have a lot of Japanese, Koreans, or Asians, or maybe you can say even Europeans coming to Malaysia to work, and they like to reside here. And thereafter, you will also see that many Japanese companies after the millennium, when Malaysia has become a country full of bad news, especially corruption and things like that. So many went off, shipped off from Malaysia. They leave, they sold off their factories, they leave, and eventually we don't have so much expats as we used to. But instead, during the years of the early 2000s to the 2010s, we see an influx of different kind of foreigner coming into Malaysia, which is the Bangladeshis, the Myanmars, those for workers' ship. But of course, when those came in, those are not the expatriates that can stay in Mont Kiara. So eventually, your Mont Kiara supply that you keep building, there's not enough foreigners to come in to buy, and eventually prices go down. Sub-sale prices go down. So then, what kind of inquiry come in? The people who are buying houses like ourselves, our Malaysian friends, our friends and family, who look for a high-end area, who looks for a better quality of lifestyle location, they prefer Mont Kiara, but they can't afford it. So eventually, they only can afford a certain amount of property price, which is between 600, 1,000 to 900,000. So that's why Mont Kiara prices from 1 million condominiums dropped to 600 to 900,000 during those days. And now, of course, we have a mixture of a very good kind of population in Mont Kiara. And of course, for those condos that is in the KLCC or any fringes of KL or outskirts suburban areas, who has been building high rises all along. Like example, I give you another one in Klang. Klang is a place where there's plenty of land. And some developers decided to be funny to go and build high rises in Klang. So when you have this kind of issues, then again the developer will be very happy because they see that, look, I managed to engage like 3, 4, 5 agencies, real estate agencies, and they have pushed up in the market. They managed to sell to all this population around there, and then they bought the condominiums in hope that, of course, there's good rental and the property is very good to stay and things like that. But when the keys has been handed over, then the problem comes. Suddenly you see the condos, you're living next to factory workers, you're living next to people who you didn't expect to be your neighbors, okay, the unwanted neighbors. And eventually the condo's image comes down. Eventually the property becomes more dilapidated, and of course you don't get the vibes that you promised for. So because it doesn't make sense that when you have a place where there's so much land, you build high rise. So yeah, I mean, all of us do see. You go to Klang, you see one high rise there. You go to Shah Alam, you see some high rises where there's still plenty of land to build houses, and people don't understand that. Why on earth did they went to the shopping mall or receive a call from an agent? They were tempted to go for a showroom viewing, and suddenly they just were tempted to buy a property because there was no money down. There was no money down, and they think, okay, fine, just put in my name, I'll pay 500 ringgit, I can own a property. So they did not see the fact that after you own a property, you have to pay installments. They thought that really I can just rent it out and cover my installments, or even something that, oh, got cashback, I buy now at the shopping mall, or the agent who just approached me, I buy now, I get 20,000 or 30,000 cash rebate. Then I can buy a car with it, or I can do something. They're actually killing themselves. So yes, I can tell you that every friend of ours, every mutual friend, or every one of us, we have a friend next door who are holding a property in the high-rise property, which they are stuck now, they can't sell. If they sell, they have to sell it for a much cheaper rate. So yes, this is the issue that we are facing. The overhang properties in the entire Klang Valley and Malaysia is a big issue now. And of course, Malaysia as a whole, we are a country that we need foreigners to come in. We are a migrant country, I would say. For hundreds of years, this country has been dependent on migrants, people from other larger population civilizations to come to Malaysia to dwell and also to do business. And because we are located in one of the most busiest highway of shipments, we talk about the Straits of Malacca. We are the gateway to the east to the west, and the west to the east. And yes, we really depend on a lot of migrants in Malaysia to grow the population. And our population was dependent on migrants all these years. And yes, I would believe that if we have the wrong sets of migrations coming into Malaysia, that is where we will get stuck with all this overhang. Till today, no doubt, you see in KLCC, wherever we build any high-rise, whenever we build any residence that is to sell to, we don't only aim for local Malaysians. We have to aim for foreigners. We have to aim for people who are staying Singapore, the financial hub, to link up to many countries around the world. You have to go to Thailand, you have to go to China, you have to go to Philippines, you have to go to Vietnam, you go to Indonesia to sell your properties, because yes, everyone in ASEAN will buy a property in Malaysia because Malaysia has a very good positive environment of no natural disasters, minimal natural disasters, which that's why we have major companies aiming to put their factories and items here.
So the solution to the overhang is really, I mean, other than the policy side, is continuing to encourage the growth, the immigration from other countries of the high value sort of population that we want to attract here in Malaysia. And I think like what you mentioned, many of us know be it friends, family who has gotten into these schemes, sold the idea, get your cash back, no money down, and they're sold the dream of cash flow or like financial freedom, right? And then when they get into it, then they are hit by that reality. So what's your advice to people who are like first time investors? how can they really assess the market? Is this really a good deal or not? What are the basics that they should look out for?
I think this one is more to definitely if any investors or purchasers go to buy a property, they have to educate themselves. Education is very important, and where to get this education is, of course, you have to qualify yourself, the people that you go to, or you get a mentor, or you get someone who you can speak about or to learn from.
Such as yourself.
I mean, yes, of course. If I'm going to do some of my bring out my experiences into the market, it doesn't come free. Of course, due to the 20 years of experience in the market, yes, I believe I can be able to coach. I've coached many agents to become millionaires, negotiators, real estate agents to become millionaires. I think it's not an issue for me to coach investors or real estate purchasers to become, or investors to become millionaires, because I myself have done it before. And to be honest with you, I done it in a way that I was in the market. I was in the market, and it took years, and it also took many lessons to be learned and many things to knock your head on to be able to be able to be where you are today. Okay, and of course, being able to invest in a commercial property, industrial property, and of course residential properties as well. But yes, education is the way to prevent you from being scammed, or to prevent you from being doing the wrong decisions in the market. Okay, and that's why in Malaysia we have this. Many of those gurus are making money from all these shows and all these talks that they give, trainings. But eventually, yes, when you come to these guru issues, many of them would have taught. And then after the end of the guru talk, there will be some whole big scheme of real estate jumbo package for you to buy. So after you have been hyped up, then the guru would have tied up with the developer to show you products that you are not supposed to buy, okay, but you did not qualify it properly, and then you bought it, and then you got stuck with the property. And the best part is those gurus, they like to ask you to do, hey, you should buy 2 or 3 units, so you get a multiple loan submission, compressing your loan compression and things like that. So these are the issues. People thought that there was a good deal in town, but let me share with you. You are supposed to educate yourself. Go out and find good deals. You have to do your duty by checking all sorts of things that's coming in front of you, whether these can or not, the numbers make it or not. Can you really get the particular yield or the returns that you wanted? And for this part, I believe I'm not going to ask the market or someone like you who are listening to go and submit yourself to become an agent, or to go and take up some course to become a real estate agent, or go and take up a course to be a valuer. You don't need to. You just need to go out to a certain 2 days or a week training for you to upgrade yourself and to talk to real mentors, real people who can give you the entire skill set and techniques to go and find out what can be invested and what not. That is very, very important. And having to pay this kind of education, you also want to make sure you pay to the right person. Of course, you don't want to pay someone who wants to give you at the end of the talk, oh look, buy this thing, buy that thing, buy. We will not want you to buy anything. We will want you to learn from what we have taught you. Then you go and check whether those things that you've been given can buy or cannot buy. Yeah, that is very important, because I think in Malaysia we are lack of this. Malaysia education business is a big business. Why? Because our government is not giving us the good best of educations. They're only preparing you to go out the market to get caught. They're only preparing you to go out the market to go and knock your head around the walls that is prepared for you in the market. But yes, after you come out into the market, after even you have a degree, you have a master's degree, that doesn't guarantee you that you won't get caught in the real estate market. You still can get caught. So that is the important thing that everyone needs to understand. Getting yourself prepared to come out and invest in real estate, you must mix with the people who can tell you the real estate can be done or not, or can be invested or not. And that comes not only for free, but it comes with education. You have to learn. If you don't learn, I would say you will definitely be conned.
And cons and scammers are just getting more and more sophisticated in the market. They repackage themselves, make them look nice, tell you what you want to hear, and they can become very, very convincing. So hopefully together with the LT Property Insights podcast, together with LT, you are shaking the market, right? To be able to bring knowledge to light coming from over 2 decades of experience in the property market to really help investors. Those, I'm sure the listeners who are listening in right now, you all are here to be informed, to be a smarter investor, a better homeowner, and build up your property portfolio and wealth. So if you enjoyed this session, share with us your thoughts within the comments. What do you think about what LT had to share about the property overhang market here in Malaysia? And what would you like to hear more from LT? Because in our future topics, we'll even be covering about AI and property valuation. We'll be talking about the property prices here in Malaysia and many, many more. Share with us what you would like to learn, and don't forget to comment, share, and subscribe to LT Property Insights podcast.
So stay tuned to my next episode. My next episode, I'll be talking about property scams and all the scams that you can face in the market that I've also faced for you, and I will want to share it with you how to avoid it. Alright? So thank you very much. Come for the next episode. I would like to see you there.